Hi, this is Mark Bautis. On today's episode of Financial Planning with Checklists, we're going to discuss what issues you should consider when funding an unexpected expense. An unexpected expense can really be anything. It could be a major home renovation, home repair, or it doesn't even have to have something with a negative connotation of an expense. It could be that you came across an investment opportunity that you need capital for. So the first thing you want to look at is, what is the expense urgent and necessary? Do you really need to do it? Then you want to look, is it seasonal? Is it a one-time expense, or is it something that'll happen recurring? And then you also need to know, how long do you have to fund the expense? Because that goes into the second topic of, how do you fund the expense? You may or may not have an emergency fund sitting around, or a savings account with the actual cash, liquid cash available. You may need to liquidate some investments in an investment account. Or do you have a line of credit, whether it be a HELOC or a line on your assets? You may even be able to use a retirement account. So, for example, you may be able to take advantage of the 60-day rollover that's allowed inside an IRA. Or if you have a 401k, you might be able to take a loan out. Or if you have a Roth IRA, your contributions can come out tax and penalty free. So you really want to look at all your different options for funding the expense, and look at the different pros and cons of each to make your decision. Second, you want to go down into your cash flow issues. So how is this expense going to impact your cash flow? Do you need to, if you take out a loan, is the monthly interest or the monthly loan payment, how is that going to impact your spending plan or your budget? If you do you have excess, is this going to impact being able to cover any unexpected expense in the future? So you really want to look, if you deplete your emergency fund, how do you then build back up that emergency fund? You also want to take a look at, are there any tax ramifications? So let's say you did sell some of your investments. Are you going to have capital gains? Or if this expense could be deductible as for some reason, should you take it in 1 year, or delay it to the next year, or spread it out amongst multiple years? So you really want to look at all aspects of the expense, or in this case investment, and figure out the best way to pay for it, as well as plan for it going forward. You might put together the perfect spending plan, the perfect budget, but an unexpected expense can blow it up. So you definitely do want to plan for it. You can download this checklist at bautisfinancial.com/unexpected expense, or from the link below.